I'm Dan Fitzpatrick at StockMarketMentor.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just pushing the buy button to get the tickers you saw on TV last night. I'm here to help you make money on these three stocks I saw on TV. All right, we're going to look at the earnings here. Intel. You can see the kind of move it had. You can also see the way it is trading, has been trading after hours. Now, here's the thing. It's kind of a little trading lesson here. They beat their earnings per share estimates. They were estimated to do 53 cents. They got 59 cents. Okay, that's like 10%. It's a 10% beat. That's pretty solid. The problem is they missed their revenues. Not by much. I mean, I would say it's basically flat. So the stock is down. Why is the stock down? I personally think it's because it ran up so much in anticipation of earnings that there's really nothing to do except sell and take your profits. So longer term, what I would suggest is this. Honestly, look someplace else. Nothing against Hewlett Packard. It's just that it's such an old tech company. I think you're probably going to find some higher growth stuff elsewhere. But when you look at the weekly chart, you can see this big prolonged zigzag. I just think even with this pullback, you'd still probably even get it a little bit cheaper. Here's the caveat though. If the stock starts rallying, this is for you traders, if the stock starts rallying up above the intraday high here of 35.93, we'll say 36. If the stock starts rallying above 36, you could probably take this for a long trade. This shows you if it does rally above 36, it tells you that, okay, the stock ran up, gaps down on earnings, people still want to buy the stock. There's so much aggressiveness with respect to buyers that they're pushing it up above the pre-earnings price. So that's your buy signal for taking the stock. Otherwise, though, I think you just stand aside and let it do what it's going to do. Okay, American Express. They beat their revenues, but again, they beat their earnings numbers, but they missed on revenues. This is a problem. When companies miss revenues, investors don't like that. They want to see companies increasing their sales revenues. Earnings can be massaged based on, cutting costs and moving stuff around, depreciation, blah, 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 blah. Revenues, it's either in the till or it's not. So with American Express, the stock's still just kind of trading around sideways. I wouldn't be buying this stock until it breaks out above, we'll call it like 65.50. If it starts breaking out above 65.50, then this is what you want to keep in mind. Here's the 200-day moving average. Look how much time this stock has spent below the 200-day moving average at certain levels. So if it starts breaking above this, we could be seeing a lot of time where the stock starts trading above or keeps trading above the 200-day moving average. So I would really be using that as my benchmark. Now, Qualcomm, hey, totally different deal here. Great numbers. The stock gapped up. I still wouldn't buy it first thing in the morning. Again, it's up, not up huge, 6 or 7% based, there'd probably be upgrades and this and that and the other thing. But the stock's just going to be up too much to buy first thing in the morning. Ask yourself this, if I buy this thing at $60, it was $56 before, if I buy it at $60, that's my cost basis. How much more am I going to make? How much will I make from $60 up to a higher price before the stock ultimately kind of sells off or at least turns around? I would say not that much. So here's my suggestion. Tomorrow's Thursday. I would wait a couple days. Hopefully the stock will pull back. You can get a lower entry, but make no mistake about it. The stock is in an uptrend. It's just breaking out of the channel, wait for it to fall back into it, and that's the better time to buy Qualcomm. Okay, that's it for today. Look, my website, StockMarketMentor.com, we're rocking over there. The forum is awesome. We got a lot of great traders in there and a lot of newer traders. I see posting about how they love it and how they're making money because of other trading ideas, etc., etc. The bottom line is this. I want to see you there. I want to see you go over there, stockmarketmentor.com, sign up for a free trial. First 30 days are on me. Check it out. If you like it, awesome. If you don't, you can cancel, and that's okay too. I'm here for you, but I just want to see you get over there and check that out. Okay, see you next time.